Welcome to your daily news impacting the markets. SpaceX CEO Elon Musk is facing pressure from a U.S. senator to prevent the use of Starlink satellite internet service by criminal organizations in Southeast Asia. Senator Maggie Hassan has called on Musk to take action against transnational criminal groups operating in Southeast Asia who are using Starlink to defraud Americans, reported Reuters. She cited reports of Starlink being used by fraudulent scam compounds in countries such as Myanmar, Thailand, and Cambodia, where, according to the United Nations, victims are coerced into labor for unlawful online operations. The U.S. Treasury Department's Financial Crimes Enforcement Network reported that these groups have defrauded Americans of billions of dollars. Hassan wrote in a letter to Musk saying, quote, SpaceX has a responsibility to block criminals from using the service to target Americans, end quote. Criminal networks in Southeast Asia remain a growing concern as the United Nations report that they have trafficked hundreds of thousands of people into scam compounds across the region. Efforts to disrupt these operations, such as cutting off electricity and internet access in targeted areas, have so far failed to eliminate the problem. This is not the first time that Starlink has been at the center of a geopolitical security concern. In 2022, during Ukraine's counteroffensive against Russia, Musk reportedly ordered a shutdown of Starlink in strategic areas, potentially impacting the outcome of the conflict. Starlink has also been undergoing widespread testing by the FAA to improve the air traffic control system. The agency is currently testing over 41 Starlink connections at facilities across the U.S. Speaking of scams, last week, Christina Chapman, an Arizona woman, was charged with helping North Korean IT workers obtain jobs at U.S. companies using fake identities. The charges stemmed from a scheme in which IT workers obtained remote positions at 309 companies, earning $17.1 million in compensation that was ultimately funneled to North Korea. A potential Social Security Administration policy would steer roughly 3.4 million additional people a year to local field offices for routine requests. These include requests such as address changes and benefit letters, even as the agency contends with staff cuts and long appointment lines, according to the public filings and advocacy groups. In an April regulatory filing, SSA detailed a new security authentication PIN, or SAP, that expands multi-step identity verification for telephone services. Callers would be asked to generate a one-time PIN via their online My Social Security account, and those who cannot complete the step would have to use the website or visit an office. The SSA estimates in its filing that the change will add 3.4 million field office visits each year and will take effect August 18th if the Trump administration's Office of Management and Budget approves it. Advocates warn that the change would intensify access problems. Quote, this will create a significant new burden, particularly for those who live in rural areas or have transportation or mobility difficulties, end quote, wrote Kathleen Robig, Director of Social Security and Disability Policy at the Center on Budget and Policy Priorities. She argued that the administration is rushing these changes with almost no public notice or feedback. SSA's plan would land atop other recent limits. A CBPP analysis estimated nearly 1.9 million additional in-person trips are already required for direct deposit banking changes, and found nearly a quarter of older adults live more than an hour round trip from the nearest field office. AARP, formerly known as the American Association of Retired Persons, said the PIN expansion could create new barriers for older adults who rely on telephone access, noting many seniors don't go online or lack reliable internet. SSA has aimed to shed about 7,000 positions soon, and as per a report by the Washington Post, redirected roughly 1,000 field office employees to its overwhelmed 800 number line this month, moves that critics say worsen in-person delays. In other news, Starbucks is signaling a confident stride in its back to Starbucks turnaround strategy under CEO Brian Niccol, despite reporting a significant squeeze on third quarter fiscal year 2025 profits. The company's consolidated net revenue reached $9.5 billion, a 3% increase year over year, yet global comparable store sales declined by 2%. The profit contraction is largely attributed to substantial investments in the foundational Back to Starbucks plan, including an allocation of over $0.5 billion in additional labor hours over the next year, and a one-time investment in its Leadership Experience 2025 event. Brian Niccol stated during the earnings call, saying, quote, it's clear Back to Starbucks is the right plan. It is grounded in feedback from our customers and partners and it's rooted in what has always set us apart, end quote. The strategy prioritizes operational improvements. The Green Apron service model, which Starbucks calls its biggest investment ever in operating standards and customer service, is now accelerating its rollout across all U.S. company-operated coffee houses by mid-August. Early pilots of this service have yielded promising results, showing improvements in transactions, sales, and customer service times. Additionally, its international business posted record-breaking quarterly revenue of over $2 billion during the third quarter. Looking ahead, Starbucks is preparing a wave of innovation for 2026. This includes a robust menu pipeline with offerings like protein cold foam, set to launch in late fourth quarter, alongside reimagined artisanal baked goods and new coffee experiences. The Starbucks Rewards program is also slated for significant innovations to enhance loyalty and engagement beyond discounting. Nicole stated, saying, quote, "We're not just getting back to Starbucks, we are building a better Starbucks, where everyone can experience the best of Starbucks, one that is stronger, more resilient, and consistently growing," end quote. Starbucks announced its third quarter revenue came in at $9.46 billion, surpassing analyst estimates of $9.29 billion. However, the coffee giant reported third quarter adjusted earnings of 50 cents per share, which fell short of analyst estimates of 65 cents per share. In other news, Warren Buffett's Berkshire Hathaway has been quietly amassing a staggering $4.37 billion in annual dividend income, translating to a whopping $138.63 every second without selling a single share. As of 2025, Berkshire Hathaway's dividend income is a result of strategic capital allocation, brand loyalty, and long-term conviction, according to bar chart. The company's passive income mainly flows from a select group of high-quality dividend-paying companies, many of which have been held for years or even decades. Household names like Coca-Cola, Apple, Bank of America, and Chevron generate over half of the portfolio's total dividend income. These companies are known for their strong brands, recurring revenues, and pricing discipline. This passive cash engine not only boosts Berkshire's income statement, but also provides Buffett with optionality. The dividends received can be reinvested into new investments, stock buybacks, debt repayments, or held as cash reserves, without shrinking Berkshire's ownership in the underlying business. Berkshire's approach is not based on yield chasing or short-term momentum plays, but on the belief in economic moats, the durable competitive advantages that allow companies to fend off competition and maintain pricing power over time. This strategy has led to a steady stream of passive income, which can be reinvested into new opportunities, stock buybacks, debt repayments, or held as cash reserves. Despite the current investment landscape dominated by algorithmic trading and speculative bubbles, Berkshire Hathaway's success is a testament to the enduring power of patience and quality. Buffett has 56% of his $258 billion portfolio's value exposed to AI, with Berkshire Hathaway holding stocks like Apple and Amazon.com that leverage AI in their businesses on a large scale. Earlier, it was revealed that Buffett makes over $2.2 million a day from his investment in Coca-Cola, a testament to his patient, long-term investing strategy. According to recent data, 98% of Buffett's $160 billion wealth came after turning 65, showcasing the power of compound interest and reinforcing the value of long-term investing. And that's been your daily news impacting the markets. Be sure to subscribe and follow Benzinga daily to stay up to date.